Welcome to GRE. I'm your host, Keith Weinhold. The forever renter trend keeps getting embedded deeper into American culture. What's behind it? It's more than just finances. Then there's been more talk about eliminating property taxes. If they go away, what replaces them? And we'll discuss more today on Get Rich Education.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit GetRichEducation.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Jamestown, New York to Jamestown, North Dakota, and across 188 nations worldwide. I'm Keith Weinhold, and this is Get Rich Education. Most investments reduce your income until you can start drawing on it and paying taxes on it in your 60s. That's a lot of decades of living below your means. Here, learn how to grow your means and invest in vehicles that pay you when you're young enough to enjoy it and pay you 5 ways, tax advantaged. Hey, there's a big misunderstanding about the housing market taking place right now. Yes, today's higher cost of homeownership contributes to Americans renting longer, for sure. But let's not make the mistake of thinking this is a new phenomenon just because home prices moved higher or mortgage rates began normalizing again a few years ago. That's not what it's about. Americans renting longer, that is a trend decades in the making, and it has had and will continue to have major implications on the rental housing market decades into the future. Buying your first home at 25? That was your grandparents, or maybe your parents. Today, it kind of goes like this in life's journey for the wannabe homeowner. First comes the gray hair, then comes the mortgage. Last year, we learned that the average first-time homebuyer age in America has moved up to 40. Back in 1981, it was age 29 per the NAR. More specifically, one's real estate journey, it basically now goes like this. Rent, 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 have roommates again, go back to renting, chiropractor, bank of mom and dad, then a mortgage, maybe. Yeah, the homeownership rate, it keeps falling among every age group, most sharply among 30-somethings. The translation here is that more renters are coming. For those in their 30s, the homeownership rate maxed out at 69% in 1980. It's fallen to just 47% today. Those that are older, for those in their 40s, the homeownership rate maxed out at 78% in 1982. It has fallen to just 62% today, and so on. Every 10-year age group, all the way to those age 80 plus, the homeownership rate has fallen for all of them over the decades too. Every single age cohort, the homeownership rate has fallen over the decades, and that is all per the Census Bureau. I'll tell you why this forever renter trend just keeps strengthening in a moment. But if you don't own your home, here are your current housing options. You can live with your parents. Yes, welcome back childhood bedroom with those glow-in-the-dark stars on the ceiling. Sadly, you can be homeless. That is really not good. Or the other option is you can rent something nice, new, modern, and energy efficient. The group in which homeownership has fallen the most are those 30-somethings. 20-somethings aren't even part of what the Census Bureau reported here. It fell most sharply in the 1980s, and then again after the Great Recession. And here's what I know you might be thinking, because we have some of the smartest listeners around. I bet that during times that buying was cheaper than renting, the trend reversed. That's what you might be thinking. No, it didn't. Regardless of what is cheaper, over time, the homeownership rate just keeps falling, despite those periods, whatever's cheaper, renting or owning. Now, the overall homeownership rate, that's fallen just since 2023 from 66% down to 65%. That might not sound like much, but a full 1% drop there means 1.3 million new renters already just since 2023. And now you might be thinking, well, this is like totally because home prices and mortgage rates have been higher since that time. They've been higher since 2023. You are, in fact, somewhat correct about the affordability. On a median-priced home today, which is around $420K, I mean, a 10% down payment and closing costs, that means you're out of pocket probably more than $50K. And it's $100K plus for a 20% down payment, and this is often an insurmountable hurdle without financial help from the bank of mom and dad. But this is all part of a longer, multi-decade set of trends. And look, a lot of these trends don't have much of anything to do with finances. People are renting longer because Americans wait longer to marry and have kids, and this has persisted whether economic cycles are good or bad, and certainly regardless of what mortgage rate levels are. Younger generations value flexibility. That's another reason people are renting longer. Also, 30-somethings are just simply more comfortable with subscription models like renting. I mean, look at Netflix and Uber and Spotify. It's been decades since anyone actually bought DVDs or CDs. Yeah, renting is just sort of another subscription model. More boomers are also renting for convenience. They would rather play pickleball instead of mow a lawn. This is something that they figured out a while ago. Also, higher consumer and educational debt keeps people renting. You've got buy now, pay later companies like Klarna that are booming. And mortgage eligibility got sucked from souls when all this happened. Hey, I've got a ton of reasons for why more and more people are renters today and how this trend is your friend if you're a rental property investor. Also, let's be mindful. When we broke the gold standard in 1971, asset prices took off like a Blue Origin launch and wages stagnated. That makes it tough to patch together a down payment. And look, there is still an antiquated notion out there that apartments especially are like replete with paper-thin walls and 1 in every 5 units is a meth lab. Have you toured apartment buildings, fourplexes, duplexes, and single-family rentals built in the last 10 years? Sheesh, great amenities. Expect to see granite countertops, patios, fenced yards, gyms, sometimes even pet spas at Class A apartments. Washer dryer in unit, I mean, that has been standard for a long time. LED lighting, smart locks, increasingly office nooks for remote workers. Those are the modern amenities that you find in a rental. So the bottom line here is that as Americans age, there is an elongated renter stage of life. It's not just prices or rates, it is lifestyle. And this is why, even when affordability improves, the homeownership rate should continue to drop. More rental demand is coming. So yes, an elongated renter stage, this forever renter, if you will, that is somewhat about finances, but it is more. And this shapes the landlord-tenant landscape for decades. And of course, your advantage here at GRE is Even if you live in a high-cost part of the nation, we know how to buy here, say, a brand new build-to-rent single-family property in an investor advantage place like Indiana, Missouri, Alabama, or Florida, and we get it for, say, $300K or so, and you get a tenant that will pay you rent for 4 years or more in a lot of cases. So we've been talking about where the rental demand is coming from. It is both a lifestyle choice and a financial consideration for your tenant. Now, this forever renter trend, that's something that really matters if you are providing housing to people. But some real estate trends just move so slowly, so glacier-like, that you can kind of get lulled to sleep until one day you look up and a trend has crystallized like the one that I just described. Let's compare a trend like that to something that people think matters a lot, and this does matter, but its importance is overinflated, and that is, for example, the president's nomination of a new Fed chair this year and how that's going to move the real estate market. No, not as much as people think. As we've learned here, mortgage rates actually don't have that much to do with home prices. And yes, mortgage rates do move. They are correlated with the Fed funds rate. Yes, they are. When one is high, the other will be high. When one is low, the other will be low. They just don't move in direct lockstep. Let's listen into the remarks of one Donald John Trump on the matter because he talks about housing here. This is about a minute long, and then I'll come back to comment. When Trump says him, he is apparently pointing to Treasury Secretary Scott Bessent, who was in the room at the time, but as you'll hear, he's not expected to be the Fed chair selection.
Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And frankly, I'd love to get the guy currently in there out right now. But people are holding me back. He's done a terrible job, hurting housing a little bit. The truth is, we've been so successful, we've blown past his interest rate stupidity. He's been wrong. That's why I call him too late. He's too late. Jerome Too Late Powell. He was recommended to me by a guy that made a bad choice. And it's too bad. But despite that, it's having very little impact because we have all of these things happening. But it has an impact on housing to a certain extent. He's a fool. He's a stupid man. But we have some very good people.
Yeah, so this matters, but it's as much entertainment and almost comedy against a demographic trend like the forever renter propensity. A calendar year recently ended. It's time to make a quick rundown of the overall investing landscape. Once in a while, we do that. It's good to check the movement on other asset classes outside real estate. It's our asset class rundown. For last year, the S&P 500 was up nearly 17%. That's the third year in a row of double-digit gains. In the year that Warren Buffett stepped down as CEO of Berkshire Hathaway, there's a warning. The S&P Shiller price-to-earnings ratio soared above 40 for only the second time in history. That's an indicator that stocks are overvalued. The only other time that happened was during the dot-com bubble. In real estate, single-family home values were up about 2% per the NAR, just over 1% per Case-Shiller. Apartment building values were flat to a slight decline. There is no such thing as an official apartment building price index. CPI inflation up almost 3% on the year. It now hasn't been at the Fed's target of 2% or lower for a calendar year since 2019. Yeah, it has run hot all that time. Last year, mortgage rates fell from 6.9% to 6.2%. And then, as you would expect, the yield on the 10-year Treasury note also fell from 4.6 to 4.2. The dollar fell hard with a thud, down 9%, its worst performance since 2017. WTI oil prices fell from $70 to $58. That's an 18% decline. But really, the story of the year among all asset classes is what happened with precious metals. Gold up a staggering 68% over the past year, touching an all-time high of about $4,500. Silver up about 155%, leaving investors flabbergasted and slack-jawed, touching an all-time high of over $80. Platinum and palladium had near triple-digit gains. The real price of gold, this means inflation-adjusted, even jumped to its all-time high last year, significantly surpassing the previous peaks of 1980, 2011, and 2020. Realize this: more than 80% of all the recoverable gold on Earth has already been extracted. Silver has been the top-performing major asset class. In fact, today, a little 1-ounce silver coin is worth more than a 300-pound barrel of oil. Sticking with the topic of metals, inflation finally killed the penny. The last one was minted in 2025 in Philadelphia, ending a continuous run of the U.S. minting the penny since 1792. No more. Bitcoin was down 6%, falling from 93K to 87K. The Nasdaq is aiming for near round-the-clock trading. It currently trades 16 hours a day, 5 days a week. They are looking to go up to 23 hours a day, 5 days a week in the second half of this year. That's our year-end asset class rundown. Coming up in future weeks of the Get Rich Education podcast, I am going to do an episode on overpopulation versus underpopulation. Is the world over or underpopulated? And is the United States over or underpopulated? This obviously has huge implications for the housing market. Then on another episode, we're going to discuss a real estate exit strategy we've never discussed before called the 721 exchange. Now, you might have heard of the better-known 1031 tax-deferred exchange, but the 731 is different. When you get older as a property owner and you realize that you don't want the hassles of landlording anymore, you can sell your properties to a partnership. The 721 exchange dictates that this is not a taxable event, and therefore no capital gains taxes or depreciation recapture are due. Property owners still get the benefits of cash flow and the appreciation across a greater number of properties and markets, and it's a great estate planning tool as well. Yes, that's the 721 exchange. We are going to cover it here when it comes to investment real estate. I guess we cover nearly everything. That's coming up on a future episode. As for today, we're talking about property taxes. If they go away, what replaces them? That comes up shortly. Visit GetRichEducation.com to learn more about how we help you and what we do. And to get connected with Real Estate Pays 5 Ways type of properties, visit GREMarketplace.com. I'm Keith Weinhold. You're listening to Get Rich Education. You know, most people think they're playing it safe with their liquid money, but they're actually losing. Savings accounts and bonds don't keep up when true inflation eats 6 or 7% of your wealth every single year. I invest my liquidity with FFI, Freedom Family Investments, in their flagship program. Why? Fixed 10 to 12% returns have been predictable and paid quarterly. There's real-world security backed by needs-based real estate like affordable housing, senior living, and healthcare. Ask about the Freedom Flagship program when you speak to a Freedom coach there. And that's just one part of their family of products. They've got workshops, webinars, and seminars designed to educate you before you invest. Start with as little as $25K and finally get your money working as hard as you do. Get started at freedomfamilyinvestments.com/GRE or send a text now. It's 1-937-795-8989. Yep, text their Freedom Coach directly. Again, 1-937-795-8989. The same place where I get my own mortgage loans is where you can get yours, Ridge Lending Group, NMLS 42056. They provided our listeners with more loans than anyone because they specialize in income properties. They help you build a long-term plan for growing your real estate empire with leverage. Start your pre-qual and even chat with President Chaley Ridge personally. While it's on your mind, start at ridgelendinggroup.com. That's ridgelendinggroup.com.
This is author Jim Rickards. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education, episode 588 for the 12th consecutive year here. I'm your host, Keith Weinhold. I look forward to perhaps meeting you in person this coming weekend as I'll be attending the Real Estate Guys Create Your Future Goals Retreat event in Colorado Springs. You probably remembered that we have had the event's host and leader, Robert Helms of the Real Estate Guys, on the show with us here several times in the past. What a class act. I'm spending a few extra days after the event in Colorado Springs to both look at local real estate in that market and climb the Manitou Incline. It's this grueling climbing challenge up a slope of Pikes Peak. If you want to climb with me after the Real Estate Guys event, bring your running shoes and I'll lead a group of us up there. If property taxes go away, what replaces them? Realtor.com recently had a terrific article about this that you can look up. The property tax revolt is spreading, but the replacement plan isn't. Let's look at the probability and possibility of eliminating property tax. Think about how property tax elimination would increase the value of your property. Well, because now every buyer could afford to pay more since they won't have that property tax expense. And of course, if you were to remove property tax as a line item from your income and expense statement, your cash flow could double, triple, or even 5 or 10x depending on your current cash-on-cash return. But that cash flow part is less likely because most efforts to eliminate the property tax, they focus on homes, primary residences. Well, several states have either active legislation efforts or these sort of informal grassroots movements to significantly cut down or just totally abolish property tax, but no state has fully eliminated them yet. The most prominent efforts are in 5 states, most notably Florida, where Governor Ron DeSantis has made the most noise about it. He proposed eliminating property taxes on homesteaded, which are primary residence properties, and he aims for a constitutional amendment on the November ballot to achieve this. That is 10 months from now, and that proposal, it's still pretty early in the legislative stages, and the state is also considering property tax rebates in the meantime. Now, even if you own rental property and property tax were only eliminated on primary residences, it would still cause the value of your property to boom pretty nicely, even if it didn't help the cash flow. The state that's made the second most noise is Ohio. A grassroots organization is called Citizens for Property Tax Reform. They have actively campaigned to place a constitutional amendment on their ballot that would just totally abolish property taxes statewide. Third most is Kansas. They propose legislation, and that aims to effectively bump up sales tax to replace property tax. The fourth out of 5 is North Dakota. Let's look at what they're doing. Following a failed 2024 ballot measure to just totally abolish the property tax outright, well, there's a new proposal from the governor, and that seeks this phased-out elimination for most homeowners over a decade. And see, North Dakota has a slightly better chance of pulling that off because they can fund that from the state's legacy fund. That's their oil well fund. And then making the 5th most abolition of property tax noise is my home state of Pennsylvania. Lawmakers have introduced bills to eliminate all property tax. They also aim for a constitutional amendment to put that issue before the voters. So they are the 5 states that have made the most noise, and that's what their approach is. Now, seemingly, for most of my life, homeowners and landlords have griped about property tax saying it's the most ridiculous tax of them all because you pay it year after year after year in perpetuity and it just never goes away, unlike other taxes that are just a one-time tax. Even if your property's mortgage is paid off, you still have a house payment, and that is largely due to property tax. Understand, though, that currently a lot of states give you a reduced property tax once you reach a senior age, usually age 65 plus. Some start as low as 61. But when it comes to eliminating the property tax, there's a part of the conversation that's really important, and it has been notably absent, and that is a novel solution to replace the lost revenue. And it gets rather interesting to look around and see where else the money might be raised if they eliminate property tax. See, and this is really important to understand. Property taxes generate 70% of local revenue, up to 90% of school funding, and 25% of all state and local tax revenue in aggregate in Florida. Okay, that's just in Florida, those numbers, but a lot of states have a similar scenario. And in Florida, that comes out to about $50 billion a year. That is a big hole to plug. That is a big gap to fill, and it underlines both the burden homeowners are currently shouldering and how hard it's going to be to fill that gap with anything that's more stable or equitable that is going to last as a funding source. Yes, 90% of school funding. You heard that right. If you talk to an old timer, sometimes you still hear an elderly person refer to property taxes as school taxes. So see, this question of do you want to abolish property taxes? One reason that's become louder and louder these past few years, and why you hear more about it, is due to that increased affordability strain. That's why you're hearing more about it. Now, the question, do you want to abolish property taxes? That is the wrong question. A grassroots push to axe the property tax, that's gained traction really among some senior homeowners facing property tax bills that are as high as their mortgage once was. Last summer, for example, in Mahoning County, Ohio, the tax delinquency rate hit 18%. Almost 1 in 5 people having trouble paying their property tax, and that county had more than $70 million in unpaid property taxes. In some neighborhoods in Youngstown, as many as 1 in 3 homeowners were behind, and in Cuyahoga County, which is basically Cleveland, values jumped 32% on average after reassessments. That fueled a $60 million increase in past due balances. This whole do we want to abolish property taxes question, you're going to see why that's the wrong question and why it's incomplete. Because that slogan, that skips the only part that really matters here, and that is, what is the replacement plan? Realistically, taxpayers should be asked if, in lieu of property tax, they'd rather pay higher sales taxes or higher income taxes, or for those with no state income tax like Texas or Florida, pay one for the first time. I don't like those answers. I wish governments would spend more efficiently, but that's not the angle that we're looking at here. Property taxes are the true lifeblood of local governments. I mean, they fund everything from public safety to roads to schools. And just because property taxes disappear, well, that doesn't mean that the need for firefighters goes away, or the need for police officers goes away, or the infrastructure for public school systems is going to be gone, or that roads go away. So if property taxes are cut, then another revenue-generating device has to emerge to keep services funded and running. And it's a little funny. I've been talking about certain states here, but of course, property taxes are exacted and assessed at the county and local level. And look, I mean, you know how the world works. You know what the nature of society is. As soon as someone has their income stream, they quickly grow into that lifestyle and the new, larger spending pattern. So taking away an existing income stream or even reducing it a little, I mean, that can almost trigger outrage in protests. For example, the outcry that we had last year about cutting SNAP payments, but it works this way with anything. I mean, sheesh, for the majority of Americans, if you cut their income even 10%, they would struggle to survive. They would struggle to put food in the fridge. So these repeal the property tax campaigns, they often avoid the reality of the replacement math. Now, some states have taken a swing at replacing property tax revenue, but few, if any, have succeeded. Now, Nebraska lawmakers, what they did is they floated higher cigarette taxes as a way to fund a goal of cutting their property taxes by 40%. I mean, nice try, but according to an analysis by the Tax Foundation, that tax base was far too small. I mean, to tell you more about what a terrible miss this example is, Nebraska cigarette taxes, they raised about $52 million in 2024, while property taxes raised $5.3 billion. That is 100 times more. Not even close. Even if you could raise more money in the short run, excise revenues like this cigarette tax, they're pretty volatile and they often shrink as the demand ebbs and flows. So it really makes them a poor backbone for expenses that grow over time, and they don't eliminate the cost so much as concentrated. So what they do is they sort of shift this broad civic obligation funding all this stuff, police, fire, school, from homeowners onto a much narrower group, in this case, people who smoke. That is not going to work for Nebraska. All right, well, what about a bigger deal, like replacing it with sales tax? Well, they run into a different problem. Local economies are not built the same. You might have a sales tax heavy tourist county. Oh, they can raise far more money than an agricultural county. And Florida is a clear illustration. They have lots of tourism and lots of agriculture. Replacing property taxes with sales tax, that would require eye-popping sales tax rates too. According to the Tax Foundation, Florida statewide, they would have to go from 7% to over 15% sales tax in Florida. But it gets even worse because counties with a thin sales tax base would have to charge over 32% sales tax. My gosh, that is not going to work. All right, well, how about another big one? Let's have income taxes replace property tax. In a lot of states, I mean, the income tax, that's large enough to raise pretty meaningful revenue, but the trade-off is that income taxes come with their own sort of economic and political distortions, and once they're added, they rarely stay confined to the tidy swap that voters were promised. I mean, look at New Jersey. They adopted an income tax in the 1970s to provide property tax relief, but over time, that swap proved hard to manage and hard to enforce, and now today, New Jersey has one of the highest effective property tax and state income tax rates combined in the nation. So the point is that all these property tax replacement tools are just inherently piecemeal. Each tax or fee has like this different payer base or some different vulnerability. I mean, if tourism dips, for example, revenues could drop really fast. And the same is true if a regulated industry contracts or if consumption patterns shift. And, that volatility, that's manageable for some narrow program, but that is dangerous as the foundation for essential services like public safety and street maintenance and police and schools and fire. Well, how about forgetting all that? Let's just have the government then totally get out of providing public safety and not have the government provide street maintenance and have the government get out of schools. I mean, we used to have more private companies provide you with some of those services. We didn't even have a federal income tax at all until 1913, other than a temporary one to fund the Civil War. But all of that is a bigger topic that we are not going to get into today. The point is, instead of asking the question, do you want to abolish property taxes? The better question is, which replacement are you choosing and who pays for it? Because local costs, come on, they're just not likely to shrink anytime soon. After all of this schools, fire and police departments, public works divisions, they're all subject to the same inflation and the same rising costs as the rest of the economy is. So the property tax, as unpopular as it is, it does have one functional advantage. It is tied to this immovable base of properties. It's collected locally, and it's designed to fund ongoing services. That is not to say that some homeowners don't need relief. Some of them clearly do. But eliminating property taxes, that just does not eliminate the underlying cost of government. All it does is reallocate it, and that reallocation can get messy. That shifts a bigger burden onto a smaller share of taxpayers, whether it's smokers like it was in Nebraska, or whether it's rural shoppers like the Florida sales tax example, or doubly on working homeowners like it is in the New Jersey income tax example. I have studied this, and I have not seen novel approaches that really keep communities funded without creating some new distortion somewhere else. But unfortunately, one thing that I have seen is this repeal rhetoric, and it makes these political platitudes, all that want to just conveniently skip the replacement plan, but it all sounds good and popular when someone stands up there and says that they want to eliminate property taxes. So really, the honest question on a ballot, it's not, do you want to abolish property taxes? The honest question is, are you willing to pay higher sales taxes or higher income taxes or adopt one for the first time and accept the distortions that those choices to create to eliminate the property tax? I'm not going to get into the political side of all this because that's not what we do here. The bottom line is, though that you're probably going to hear more about the property tax going away, it is unlikely. Of course, as income property investors here, property tax is largely built into the rent. It is passed along to your tenant, and a small reduction would help you out. Probably not so much on your cash flow side, since most of these proposals are only for primary residences, but even a small property tax reduction on primary residences, that would boost all property values, even rental property in the 1 to 4 unit space. But you shouldn't expect much here. If property taxes are eliminated, there is just no easy and viable replacement. That's your answer today. If you represent a company that serves real estate investors, Get Rich Education has over 3 million IAB certified downloads and 5.8 million total listener downloads. You can learn more about advertising on the show at getricheducation.com/ad. That's getricheducation.com/AD. For the production team here at GRE, that's our sound engineer, Bidram Jampa, who has edited every single GRE podcast episode since 2014. QC and show notes, Brenda Almondadas. Video lead, Binay Gyawali. Strategy, Tala Mughal. Video editor, Sarosa KC. And producer, me. We'll run it back next week for you. I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.